Well, here we are. It's a beautiful day. It's trying to snow. Got a new 3 inches everywhere, and
Temperatures plummeting.
yeah, it's becoming very much of a traditional white Christmas all month January, not the typical real estate winter where you've got a little bit of snow to blow away and you can still see the backyard brown right the way through the first and second quarter. So. That's our scuttlebutt. Ron Hauth joins Robert Ede on Real Estate Chat. And we're talking about the results that came from the Toronto Real Estate Board on Wednesday. And Ron's done his charts, I've done some, and we both had a chance to think about what we know about things that happen and what to look for and what to not look for. Ron was just mentioning that in a very good neighborhood that he follows, fella who he knows had a listing and it sold at what would be called as a big price in no time flat, and everybody else says the market's lousy. So how can that be, Ronnie?
Well, it was renovated front to back, top to bottom, side to side. Within the last few years, everything was essentially new. Warranties on everything, really quality construction. They priced it well, I think. Walking distance to the subway, the Yonge and Lawrence subway, and
Oh, Young and Lawrence. So what price class is this we're talking about?
well, for around $4 million. I didn't
Yeah, okay. So
listed
it's
it
much
for.
more than we normally talk about. Normally we
Yeah,
talk about 1, 2, 2, 5. 4 million is I'm going to say it's up, getting up there.
that's up there. That's one of the higher priced homes
Yeah.
to sell in the neighborhood this year. But he sold it in 8 days from the time he listed it to the time that they had three offers and firmed up. So I
But,
went to see it. It was a gorgeous renovation. Really, really
oh,
well done. Well thought out. Well finished.
and the neighborhood's excellent,
Yes, yeah.
and the school's good, and
That's
there's nothing to do, and so all you need is a few extra bucks, and it's the perfect thing. You probably couldn't put it together for less than five, so it's a bargain.
Probably not. And it was so nice. The new owners will just have to decide where they want to place their furniture. Basically, there's really nothing at all to do.
Man, oh man.
However, in a market where it seems uncertain, and where it has been, seen something sell like this so quickly, this means there are people out there ready to buy. I think waiting for the right price things in probably all price ranges. These
Well, I think that's exactly the right sentiment. There are people who are sitting, waiting to pounce on a great deal, not
Yeah,
an average deal, not just a run-of-the-mill place. I'm reminded of a fella who was switching over from residential to going to be doing apartment buildings. Les Wallace is his name, still with Remax, I believe.
right.
And he said, this is 1992. He says, unless it's a super bargain, nobody cares. And so anything that's super quality, just like the one you described, A1 neighborhood, A1 condition, nothing to complain about. Where are you going to put your furniture is the only thing you have to decide. There's no resistance. And if I look at the sales that come through, there was only 3,000 in the month of January, which is lousy for January. But, you know, it was New Year's, everything didn't go, we didn't get back to a market until halfway through it. And then it was freezing cold and snowy like crazy. So um, it's got to be a super bargain. So if you've got something that I always try and categorize things. If you've got something that's average, you got a surplus rental property, you've got a surplus, a house that you used to live in, you rented it out for a while, now you want to get rid of it. I think you have to do the really aggressive pricing, like 25% under what you're expecting and hold offers. I don't like that strategy, but you've got to do something to bring attention to that property. And uh, people are there looking for that kind of a bargain. They'll give you lousy offers, but you want to get more than one lousy offer at the same time so you can play one against the other. But
Right.
if you've
So
got A1, just like your buddy's got A1 place, just put
yeah,
it out normal. Someone's going to grab it.
yeah, and he did price it right. It probably would have gone for more. You can see on these graphs, the average prices have gone down over the last few years. and but he priced aggressively. I thought $4 million was not going to get as much attention as it did, and there's so many people that went through it and offered on it that I was pleased for him. He didn't introduce the buyer. It was another agent that brought the buyer in, but
Sure.
nonetheless,
Well, I'm going to say that that's an anecdote, but it's also an example of don't think that everything is black, that there are bargain hunters, but there are also value seekers. That if you've got something that's good value, then they will seek you and they'll come and get you. So I'm going to start out with this screen that we already tried to share, and we'll see if we can follow along with comments on that. Okay, so our commentary is it going to be up, down, or sideways in 2026? We don't know. It's too early to tell, is my opinion. So let's see if we can make this a little smaller, bigger. Okay, and as I was saying, there's a couple of categories of buyers. First-time buyer who they are being very, very cautious in their own little price range, and they're sensitive to interest rates. Last-time seller who occupies the house, just like the fellow you were talking about. If you bought it before 2003 or you have lots of equity, it's a very simple story. It will sell, no problem. People are looking for good deals. Buy and sell customers trading up or trading down, that's a little bit of an artful situation that you got to contemplate both at the beginning and say which one's more difficult and do the tough one first. And then
right,
the investor, that was a big part of our market, big part of our spec market, I call them, in a negative, smart alecky way. But any of these investors who don't occupy the property, if they're underwater and they want to sell it now, they're going to have a real hard think about what they want to do. Someone who's in the money, and if they're satisfied with the tenant situation, maybe it's just a time to wait because there's a lot of inventory. There's far too many competing properties that, with that number of, we'll look at inventory, the number of competing properties as it builds back up to peak inventory again for the spring. We warned about this a couple of years ago that if there's a glut, that causes everybody to be competing with everybody and prices to dip. So if all of the buyers want the prices to come down 40% from the peak, 50% from the peak, 30% from the peak, whatever they say, then that is going to be paid for. That drop from the peak of 1.3, whatever it was. The difference is going to be paid for by everybody else who lives in a house that was sort of counting on selling that and having that extra $300,000 to put in their piggy bank or give to their kids or whatever it was. So a rationalization of prices by that much. We're already about 27% off the peak, 40% or something like that will really be a shock to the system. And who knows? We don't know. The future doesn't know the past. I've written here. This outline that we've looked at many times before, for the first time, when the Toronto Real Estate Board's average, the number of houses that sold and the price that they sold for all multiplied together, dipped below this exponential drawing line here, line projection trend line of the previous lows for the first time. But that could change. That could change. We'll have a look at that
right, yeah,
again as February, March, like the spring market. I think we have to give it a chance. Here's your graph. Your graph tells a tale of coming down, coming down. So we've had coming down before, but we always had a recovery sometime. We can predict all we want. Like January results, here it is, the bottom of the chart. Bottom of the chart. If this one starts in September and goes through to August, I call it the school year. But how can you make any kind of a prognostication from the bottom? 2 months from now, you're going to have a much better idea.
yeah.
Toronto Real Estate Board. Go ahead.
We have just exceptional circumstances we haven't had before. The interest rates are a bit high, but they're down to where I think people are becoming more optimistic about the interest rates. But we've got the uncertainty in the U.S. with trade all over the world, I guess, is leading people to be uncertain. And this extremely cold weather, which, although we're Canadians, we're used to cold weather. This has been over the top or under the bottom, I guess.
That's right. We got spoiled a little bit, and we're well. it's just uncomfortable. And if you're 27 years old, I guess you just tough it out and go skiing. But if you're not, then you say, I'm staying home.
Yep. I
Yeah.
think that's
So,
that's happening. So all of those things that combine to cause the market to hesitate. And as you
yeah,
say,
well,
in a few weeks when this some of this stuff starts to level out, the temperatures start to come up, and the days get longer, I think we'll start to see more activity, and we'll be able to get a better picture of what's to come for the rest of the year.
well,
At least the
absolutely.
spring
Days
market.
getting longer. I forget which month it is, but they're going to change the clocks pretty soon. And I noticed from where the sun hits my car in the driveway that the sun didn't used to hit it. Now it does. So I think it's a little bit early. If we look, look at where the prices are. We can't tell from that.
Yep.
We can't tell from this. This one I like. This one I like. There we see. This is again this school year starting in September. We have a line, but this is the same line that's been going for a while. The next one takes off that big boom, and so we have a line that's continued to go down. And now we've impacted January on the previous, which is the 2020. Everybody's talking about we're at 2020 prices. Okay, 1 month does not a market make, but what's going to happen? Are we going to break down through that line? Is it going to move up from there? This will be interesting to watch. This will be interesting to watch because it's about, if you look, I used to think there was a difference between 905 and 416. 905 had a different peak than us. They peaked higher, 1.4. We peaked, and when you average it out a couple of months later, the average is 1.3. So our Toronto's 416's average peak was 124, and this is 140, the average being 130. So the difference in 416 is 23% off its 416 peak. 905 is 29% off its peak, and Treb is a blend of the two on a weighted average, of course, 27% off. So, but they're both fighting. Nobody's setting records. This is just like your chart, from the up to down. They're sort of fighting about, depending on which house sells and which house doesn't sell. Both regions were off by over 30%. So nothing's going to happen when you're off the average by 30%. The new and active listings, they're building up again. Here's a tick up, tick up. All the people who
Yep.
took time off on December the 15th put their house back on the market. There it is. They're coming, they're coming, they're coming.
Yeah,
New
it's
listings back up.
and on that previous graph of mine, you can see where the patterns repeat themselves every year.
Yeah.
So
Tick, tick, boom, tick, tick, boom, tick, tick, boom.
yep, up in the spring, down in the summer, up in the fall, down in the winter. So that's going to happen again, and it's already, we can tell from the January numbers, it's already starting that way. So,
Well, if you look at the listings that come through, I scroll down, you know how you have to see what is this a new one or is this a relist or was it for sale
oh
last
right,
year?
yeah,
A great number of them. I don't know whether it's 40%. I always say it's 25% relist, but easily 40% of them, if not higher right now, were for sale in September, October, November, December, and they took it off, and now they're back again. New listings, 10,000 is not a tremendous number, but it's a good number for January. And this is trying to subtract the news from the relist from the new. Active inventory just a tick up, but give it a chance in February, just a chance to get back up to the territory of 20, 25,000, and then we'll really have a glut. We'll really have a glut. Number of months, because the sales were so lousy that we up into dividing into inventory gives us nearly 6 months. I think you've got the same chart as
yeah,
dividing
just
into
different,
total inventory and into new listings.
right?
New listings will be lower because it's the same number divided into new, and then almost to six as a number of months of inventory. But it's not as bad as it once was. But I don't ever want to go back to here, '09. I don't want to. And I don't want to go back to the 90s. I do not want to go back to the 90s.
No, I see from this one
Well,
that we are having a prolonged period of higher month supply. So
well,
that,
this was a boom. This was a crazy boom.
yeah, oh yeah,
And I don't know when we have to go back to find normal, but probably somewhere in when it's around 3 or something or other months, it will be normal. And when we get to that, maybe we'll see some price stability. But we, can't, we dare not, 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 we dare not generalize. We dare not say everything's bad. We dare not say everything's good. And but I think the green sprouts come April the 15th, come March the 15th, will tell us what Joe Public and Joe Investor and Joe last time buyer, or Joe last time seller, Joe first time buyer, and Jane are going to do this year. So you had a good story there about the guy with the $4 million house. Have you got anything going on in more normal price range, a million or two?
No, I've got a couple of small condos. One's a couple. Well, one's an estate. The other's just got it listed, but it needs to come down in price. But nothing unusual at the moment. I had a townhouse, which they're going to relist probably in not till March. Luxury townhouse. It was a good deal.
Oh yeah, well that's a good area. That's a good area for that, baby.
Yeah, so it's they just want to give it a break and see what happens. Well, like with the market, like I say, the 1 month is not a good indicator of the market. They wanted to give it another month and see what happens, and then go ahead, adjust the price from there if necessary, or go in back at the same price.
Well, I think that's probably a good one to watch because you're going to be monitoring that all
Oh
the
yeah, every
time now
day.
on their behalf
Yeah,
and saying this is a new one in your little pocket there, your corporation, and this one sold and this one didn't. So that's going to be, I think, a bellwether. That's like 1.2 for a luxury townhouse
yeah, it's
in
beautiful actually.
Bayview and York Mills. Just can't
York
say
Mills,
anything
yeah,
wrong.
just a prime
Can't say
area.
anything wrong about that neighborhood.
Nope, not at all. It's great.
That'll be a bellwether of, does February give you enough information to get them motivated to put it back up, or are they going to wait for a better price, or are they going to get scared and say, oh, if I don't sell it now, it's like catching a falling knife. It's how far do I have to wait before I cut myself. So
Yeah, yeah. Well, in that case, you should act sooner rather than later.
well, that's what
The knife's
everybody's
not.
wondering about. Is
Yeah.
it that bad? And I guess everybody has to make a decision and start advocating. Yeah, it's going to be that bad, and so you better sell sooner than later because it's going to be lower later. Uh, I'm not quite that bold.
So, I mean, just the analogy of the knife.
Well, yeah, it's a
Don't want it
stock
to be
market
moving
term.
too fast when you grab for it. But
Yeah.
I think everything, again, I mentioned this before, everything is going up and down at the same rate, roughly. So if you're buying and selling in the same market, as long as you've got like you say, the difficult one part done, the sale in this case, because it's taking longer to sell, and then
Most times.
yeah,
Yeah. Most
except for
times.
that $4 million one, then you can go and take your time, shop, negotiate a price that's good for you, without the pressure that we had when we had to deal with all these multiple offers.
Oh, it was terrible. It was easiest to be a sales rep, but it was terrible for everybody having to make a decision in 5 seconds and change their mind 3 times in
Oh
five
yeah,
minutes.
yeah. So this is a the market's dropping, but it's far more stable and at least more manageable, I think, than these multiple offers. 20 offers. I've heard of well over 20 offers on properties in those cases. And,
That's right. Panic buying. There's no
yeah,
panic buying now.
and
So
yeah,
let's hope that saner sentiments and saner minds prevail.
yeah, I'll say. So stability, better.
Okay. Well, Ryan, let's wind her up,
All
and
righty. Well,
we'll talk about it in a few weeks, and let's watch that $1.2 million townhouse as a bellwether, and say bye for now.
all righty. Well, cheers and thanks.
Okie doke, Ron.